Welcome everyone to Vested Interest. This is Shane back again for the Stock Pick of the Day video. It is August 21st. We are going to take a look at one. I mean, if you've ever used the internet or Googled something, you probably are aware of this company, Alphabet Inc. And as you can see underneath, it has a lot of other companies here. We'll get into that here in a little bit. But this is out of the technology sector. Now, before we get too far in the video, if you could do me a favor and hit that thumbs up button down below if you find any value in the content. If you are a dividend growth investor, make sure you are subscribed to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Hit that notification bell so you're notified whenever we put out any new content. We do the Stock Pick of the Day series Monday through Thursday here at Vested Interest. We take a look at a stock that's pulled back on the day. We run it through my screener, see if it's going to make it onto my watch list to do more of a deep dive into the financials. So if you're interested in that, again, make sure you're subscribed. The vast majority out there watching the videos are not subscribed. If you enjoy the videos, hit the subscribe button. It doesn't cost you anything but a couple of seconds of your time, and it really does help out a small YouTube channel like me with the YouTube algorithm, and really do appreciate everyone out there who has taken the time to subscribe. The channel continues to grow because of people like you, over 1,000 subscribers now, and on to 5,000 and then 20,000 and then hopefully 100,000 and beyond from there. But I'm only going to do it with your help out there. Let's get back to it here. This is the Vested Interest Stock Screener. This is how we're going to run through the video. We're going to take a look at the business, understand the business, growing free cash flow for the last 4 years, expected in the future, growing a dividend. We want a growing dividend over time. Dividend payout ratio of 75% or less gives the company a little bit of room to continue to expand that dividend, as well as pay down debt, buy back shares, reinvest back into the company. Check valuation based on dividend yield theory. We're going to hopefully have 5 years of dividends to look at to be able to do that. Buy below current cost basis or within 15% of a 52-week low. I like to pick up my shares whenever I can within 15% of a 52-week low. Setting a new 52-week low even better. Return on invested capital, return on equity, we want 10% or better. And earnings per share growth, I like 5% or better projected over the next 5 years. Now for this company, because it's in the information technology sector, we will not be looking at price to book. You could look at price to book for any company. Just make sure if you do it outside the financial sector for something like a bank or an insurance company, you don't use just the one rule. One is for banks. Anything under one typically for banks is undervalued. Anything over one typically for banks is overvalued. But for other companies, you'd want to compare them to other companies that are in the same sector and in the same niche as the company that you're looking at. It must meet 5 of 8 or 6 of 9 if it was a bank to make it onto my watch list. I did adjust that because I know before it said to be investable. Now back to Google, and where can you find them? Well, www.google.com. That's www.google.com. That is one of the home pages. I did find an Alphabet Inc. Site that took you to an investor page, but I just linked the Google one here, or put up the Google one here. Didn't link anything, but put up the Google one here. So you can check them out there and find a lot of the same information. As we talked about in the beginning, Alphabet is the parent company, a conglomerate with a bunch of holdings underneath it. Calico here, you can see Google Ventures, Google X, Google Fiber. So they're putting some fiber in the ground to help spread out their information out there. Google Capital, and then Google Services. So you got a lot of apps like the YouTube app that you're on right now, Android Search, Google Search. That's the one you're probably really familiar with. That's the www.google.com, right? Google Play, Google Maps, Google Ads. They also do cell phones, earbuds, watches, just like the Apple, watch and the Apple phones and the Apple earbuds. They're in that same vein as well. So they're selling you some handheld technology there. There's the Google search there, and Google Chrome. We're all probably familiar with Google Chrome as well. Now, the reason we are taking a look at them, down 0.79% on the day. They did close out the day at $167.63. Looks like they're up slightly in the after hours whenever I pulled this information. We are talking about Alphabet Inc., ticker GOOG, out of the information technology sector. 52-week range as low as $121.46, as high as $193.31. They are slightly closer to their 52-week high than their 52-week low. Not quite within 15% of a 52-week low either, even though they did recently have a pullback because of some negative news about them getting hit with antitrust laws, I believe, or even being labeled a monopoly, I think is what happened. Market cap of $2.052 trillion. This is a mega cap company here. A beta of 1.05, so just slightly more volatile than the overall market. PE ratio 24.02. Now that would be high for a slow growth company like a Kroger's or a Kraft Heinz or something like or Union Pacific, something like that. But for a tech company like this, that's not really that outlandish. EPS sitting at $6.98 per share. Earnings date sometime between October 22nd and October 28th in that window there. Forward dividend of 80 cents. I believe they are going to be a quarterly payer, though I don't think they quite have a year yet worth of dividend payout. So that's going to make dividend yield theory hard as well. Dividend yield of 0.47%. They did just recently start raising the dividend. We'll have to wait a year or two to see how fast they are going to be raising it over time to see if this small dividend yield is even worth it or if it's really just a growth company that's offering a yield as a little kicker. Ex-dividend date, September 9th. So if you were to buy them now, you would get the next dividend payout ratio. And you want to buy the day before the ex-dividend date. So you can buy right up to September 8th and still get the September 16th payout. 1 year target estimate, at least according to Yahoo Finance, where I'm pulling this information from, $200.58. So they do see some upside appreciation on this one as far as price per share. Now, 5-year dividend yield average, we can't really look at dividend yield theory because we don't have the 5 years, right? We could compare their trailing annual dividend of 0.12 like we did to one the other day, but same thing. We don't have 5 years, can't really look at it. Now, this payout ratio, 2.87%. Extremely low. I mean, they're barely paying anything towards the dividend, so they hopefully are going to be raising this dividend very fast. Let's jump down here and look at free cash flow. I like growing free cash flow over time because typically if a company has growing free cash flow, their financials will be safe. They'll be able to increase their dividend, continue to pay down debt, make acquisitions, rebuy shares, and reinvest back into the company. Now, 2020 here, you can see $42 billion in free cash flow. 2021, $67 billion. 2022 looks like a bit of a drop down, but we're going to look at repurchase of capital shares here. Look at that. They jumped it up. So I'm going to say that that was either flat or even a little bit of an increase. And then 2023 up to 69 trillion. And then again, look at the repurchase of shares, 31 billion or 69 billion, not 69 trillion. 2021, 50 billion repurchase of shares, 59 billion in 2022. So each year they're raising. Not only is their free cash flow raising, but along with it, they are repurchasing more and more shares, 61 billion in 2023. So very aggressively increasing that repurchase of shares over time as well. Now we're going to jump over to stockanalysis.com. This is another source that I pull information, and I always recommend more than one source so that you can make sure the information you are getting is up to date and accurate. Just don't blindly follow one website or one source of information. They could be incorrect. They could be outdated. Now, they do have 36 analysts, so quite a few analysts are taking a look at this one, right? It's Google. Everyone's aware of it. It's a behemoth. And they still call it a consensus buy, and it's, close to a strong buy. With a low estimate of $129, which would be a 23.04% decrease from where it currently sits, an average estimate of $200, which would be pretty much in line with what we saw with Yahoo Finance on the previous page, and a 19.53% increase, and a high estimate of $240, which would be a 43.17% increase, and you could collect that, 0.5% dividend yield around there anyway, right now if you were to pick it up. And then if it dropped back into the low 129, maybe stock up there too. And this one, to be in all honesty, this one might be one that I add to my weekly buy list as well. I really like Google. I don't think it's going anywhere. I think it's gotten hit a little bit. It hasn't shot up. It's up, but it's not up as much as some of the other stuff out there like Meta. I really do like Google. I think long term this company has a lot of sticking and staying power. Financial efficiency, we're going to take a look at statistics, look at return on equity and return on invested capital to see how well this company is reinvesting back into itself. I like 10% or better here. Return on equity sitting at 30.87%, 3 times what I'm looking for. Very nice. Return on invested capital at 20.34%. Again, very nice. Really, really good numbers. And EPS growth forecasted at 19.96%. That's 4 times what I'm looking for. About 4 times what I'm looking for. I like 5% or better. Excuse me. And check this revenue growth out. 11.16 projected over the next 5 years. Smoking high. Very, very good numbers overall. Again, I really like Google. I think it has a lot of staying power. I don't believe it's going anywhere. We'll be saying Google it for probably decades into the future. Now, the quarterly payers, so they are planning on paying quarterly. Payout ratio, they're saying 11.48, which is a big discrepancy from what we saw with Yahoo Finance. So I need to look at that a little bit more. Is it 11 or is it, about 3? Either way, very low payout ratio. They're saying no growth because, again, they've only paid out 2 times, so only a couple quarters. Buyback yield at 2.54%. They're effectively buying back their own shares. Shareholder yield at 3.02%. I really like Google. Here you can see they just started paying dividends in June. 20 cents here. Pay date was June 17th, and it looks like their next one, so they haven't even paid 2 yet, because the next one they're showing is this 20 cents they're going to pay September 16th. So Google, 20 cents per share. If you were to buy them now until September 8th, you could lock in 20 cents per share. Let's run through the screener here. Understand the business. That's where we started. Again, YouTube, you're on it right now, so you do understand at least part of their business. Growing free cash flow the last 4 years. I gave them a check. Growing dividend, no. We haven't seen enough yet. Dividend payout ratio under 75%, yes. Either, it's around a 10%. Let's just call it 10%. Check valuation based on dividend yield theory. Can't do it. We don't have 5 years of data. 15% over 52-week low? No, it's not. Return on invested capital, return on equity, smoking high. 30% and 20% respectively. Earnings per share growth, smoking high, almost 19%. I mean, it just very good numbers overall. 1, 2, 3, 4, 5. This one is on my watch list again. It is one I am seriously considering just picking up 1 share a week, and regardless of the price, similar to the 2 ETFs that I do. We'll see. Well, that is it. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Now, I do personally read and respond to the comments, so drop a comment down below. Let me know what you think of the video. Let me know what you think of Google. I believe Google also has a different set of shares, GOOGL. I think the only really difference is one gives you the ability to have votes as a shareholder, one does not. I'm not sure what the difference is exactly on that. If anyone knows that, which one, I think that's the difference. One lets you vote as a shareholder, one does not. I don't know if that's GOOG or GOOGL, but I do know that Google does have those 2 tickers associated with it. So keep that in mind. We looked at GOOG, both of them in the information technology sector and both related to the same company. So wanted to throw that out there before we got too far. But let me know in the comment section down below what you think of the video. What do you think of Google? Either one. GOOG is the one we covered, but if you have GOOGL, let me know as well. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great weekend. We'll see you in the next one. I'm not a financial advisor. Nothing in the presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk, so you can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and selected criteria, or seek the advice and counsel of a certified financial advisor.